Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is October 14th. Mid-tier gold and antimony explorer and producer Mandalay Resources has seen an exciting 2024 with a strong financial report in its second quarter. Managing Director of Equity Research Ron Stewart is here today to delve into why the Red Cloud Research team deemed it a worthy story for coverage initiation. Moving to San Juan, Argentina, Aldebaran Resources is making headway on their Altar project as the company continues to produce promising results. The Red Cloud Research team has also launched coverage on Aldebaran with VP Mining Analyst Taylor Combaluzier here to discuss their reasons behind the news. But first, Managing Director and Head of Equity Research David Talbot has some updates on Lotus Resources' recent front-end engineering design of their Kayelekera project in Malawi. We've got a lot to cover today, so David, why don't you kick us off with Lotus Resources?
And thank you for that introduction, and welcome to episode 78 of Red Cloud Securities Research Roundup podcast. I'm David Talbot, Managing Director and Head of Research at Red Cloud, and I'm pleased to join you today as part of an ongoing series of discussions with the Red Cloud Research team. I will be joined today by Taylor Combaluzier and Ron Stewart, both of whom will be speaking about newly launched research coverage. Ron Stewart has initiated coverage on Mandalay Resources, and Taylor Combaluzier has picked up Aldebaran Resources. But to kick things off, I'd like to speak about Lotus Resources, LOT on the ASX. We have a buy rating and target price of 60 cents Aussie. And I have visited the Kayelekera project in Malawi on 3 occasions in the past decade and a half. Last week, Lotus announced an accelerated restart plan based on a completed FEED study for its Kayelekera uranium project. There are 3 takeaways here. The first 2 are positive. First, plans are to move production up by 6 months to Q3 25 from Q1 26. Now, management wants to take full advantage of all existing infrastructure to get into production as quickly as possible. Second, while total capex remains in line at about $90 million, call it $89 million US, initial restart capex lowers to just $50 million. Spending on non-essential infrastructure such as grid connection, ore sorting, acid plant rebuild, these have all been pushed out. Overall, higher grid connection, ore sorting, and tailings costs are offset by much lower ground stabilization and owner's costs, such that overall capex doesn't change that much. However, C1 cash costs are up 19%, and all-in sustaining costs rose 24%, due largely to inflation and higher royalty rates versus the 2022 DFS study. Now, this impact is muted in the FEED study, really because the uranium price assumptions also rose from $62.50 to $90 a pound, so if anything, margins increased. Thus, we do see improved economics. The study still contemplates a 10-year operation, producing 19.3 million pounds of uranium over life of mine, with an after-tax NPV now up to $301 million US, and an IRR of 66% with a 1.7-year payback. Completion of the Kayelekera FEED study should help financially and economically de-risk the project as it moves now into detailed engineering. As we wrote in early September, we anticipated management to fast-track Kayelekera to production. It can stockpile sulfuric acid, it can upgrade tailings on time for initial production, but about $40 million worth of capex items are really going to be deferred into years 1 and 2. This is the ore sorter, the grid connection, the acid plant upgrade. None of these are really needed immediately, and their addition down the road should help decrease OPEX when they are built. The management sees this strategy as strongly beneficial, and we agree, being able to take advantage of currently higher uranium prices and strong demand from potential yellowcake customers. Now, pushing capex back is more of a strategic victory than a financial one, I'd say, but it does help de-risk the restart given that less money is required up front. Look for near-term catalysts due in the fourth quarter. These include a resource estimate update, a final investment decision, offtake updates. It looks like Lotus is targeting about 25 to 30% of planned production in years 1 to 4 being sold forward. So we estimate about 2.4 to 2.9 million pounds or so, and already they've sold 1.5 million pounds of those forward. And then Kayelekera financing. company right now has 34 million Aussie in the bank. They need about 50 million US for restart capital, plus I'd say another 10 million for upfront working capital. Also in the fourth quarter and into first quarter of next year, we expect the Let the Colony trade-off study and economic studies from that project as well being developed in tandem. So lots happening with Lotus Resources. We reiterate our buy rating with the target price of 60 cents Aussie. Why don't you take it away, Ron?
Thank you, David. It's my pleasure to introduce you to Mandalay Resources. It's MND on the TSX to all of our listeners today. We launched coverage earlier this week on Mandalay with a buy rating and a $6.50 price target. It's currently trading at around $3.33 and has a market cap of around $310 million. The company just announced its third quarter production last night. Total gold equivalent production was 22.9 thousand ounces, comprised of 21.1 thousand ounces of gold and 1.8 thousand ounces of gold equivalent antimony. The company is on track to achieve its guidance for the year of 90 to 100,000 ounces of gold equivalent, ranging in cost, all-in sustaining costs, from $1,450 to about $1,580. Earlier in the third quarter, Mandalay paid off $20 million balance on its revolver and exited the quarter with $55 million in cash and effectively no debt. Production was slightly below our estimates, but I don't think it's going to have a material impact on either our valuation or outlook for the company. So far this year, Mandalay has been on a roll. Its stock price is up around 80%, which is almost double the GDX and GDXJ, the benchmark indices for producers. Current interest in the stock is undoubtedly due to the fact that its sales revenue has increased considerably from last year, up around 25% through the first 6 months of the year. And that's a reflection of higher gold price, together with the fact that the antimony price has exploded. Right now, antimony is trading at around $24,400 per ton, whereas last year it was averaging in around $11,000 a ton. The reason that antimony has moved so high over the course of the 6 months is that China, which is the world's largest exporter of the metal, announced export restrictions on the metal earlier this year. Right now, the antimony market is dominated by China, Russia, and Kazakhstan, and Mandalay has the distinction of being the Western world's largest producer of the metal. But antimony is just a part of the stock, and it really isn't the driver behind our estimates and outlook. The company is comprised of two operations: the Costerfield mine in South Australia and the Björkdal mine in Sweden. Costerfield was acquired by Mandalay in 2006, and since 2009, over 14 years, the production has been stable at around 50,000 gold equivalent ounces per year. At Costerfield, they produce about 40,000 ounces of gold and about 10,000 ounces of gold equivalent antimony. It's one of the highest grade mines in the world. The average grade is around 10.5 grams gold with about 1 to 2% antimony as a byproduct. Mill production at the mine averages about 370 tons a day, so it's a small mine, but they recover 93% of both of the metals and operate at a cost of about $350 a ton mined. At Björkdal, that mine was acquired in 2014 as part of an acquisition of a company called Elgin Mining. At year-end 2023, the Björkdal mine had a reserve of about 500,000 ounces at 1.3 grams per ton, which is sufficient for an 8-year mine life at the operation. Gold is produced underground despite the low grade, supplemented by open pit stockpiled feed. Mill production averages about 3,600 tons a day, and recoveries are about 88%. Gold is recovered to a concentrate, which is shipped off-site. The average operating cost at Björkdal is only $50 a ton, which is remarkably low for an underground mine. What that speaks to is the geometric configuration of the veins. They are very, very well understood, that they're vertical, easily mined. And so despite the fact that they're narrow and low grade, production is relatively stable. Based on our review of these two mines, we think that the company can remain producing 100,000 ounces of gold equivalent production over the next 9 to 10 years. We've actually extended Costerfield out from its reserve base of about 3.5 years to 8 years in our model. And that's a reflection of its history of being able to replace reserves. At our metal prices of $2,000 an ounce gold and $13,000 a ton for antimony, and recall, antimony today is trading at over $24,000 a ton, we believe that the company can generate over $60 million in free cash flow per year. If we put spot gold of $2,600 an ounce into our model, that number jumps to over $80 million in free cash flow per year. Now, those numbers are in US dollars. $80 million of free cash flow against a market cap in Canadian dollars of 300 million. You get the idea as to why we're so interested in this stock. If we take a look at the company, what we see is a low-risk company that is producing 100,000 ounces a year and has been doing so for quite some time. It has no big capital spending plans, so it's relatively risk-free. They've got strong management, very capable of executing at the mines and continuing to develop the projects. They have a long history, as I've said, of replacing reserves year over year. It's debt-free with $55 million in cash, so it's financially sound. Recently, Fraser Boucher, their CEO, has outlined a 3-point strategy to move this company forward. Their first point in their strategy is to maintain the cash flow and operations at Björkdal and Costerfield over the long term. The second, they've increased their exploration spending at both mines to $10 to $15 million a year. So their focus really is on to optimize the reserve replacement abilities of the mines. And the third strategic point that they're looking to address is the fact that they're a relatively small company. Management and the board acknowledge that a 100,000 ounce a year gold producer is relatively insignificant in the overall market, and so they are interested in growing. They want to improve the share trading liquidity to the name and improve the production profile and graduate to become an intermediate. That will require either an acquisition or a merger of equals. And that strategic issue is something that they are looking to address over the next year to 2 years. So meanwhile, the company is on solid financial footing, has a long history of reserve replacement and production. So it seems like it's a very, very compelling opportunity for us today to point this one out to you. That's our launch on Mandalay. I'm going to turn it over to Taylor to update you on Aldebaran. Thank you.
Thanks, Ron. Last week, we initiated coverage on Aldebaran Resources with a buy rating and $250 target price. Aldebaran is advancing its flagship Altar copper-gold porphyry project in San Juan, Argentina. This is a story we really like, and I'll lay out what makes it so compelling. First up is the management team. They previously sold Antares Minerals and the Kayelekera project for $650 million US to First Quantum Minerals, after originally acquiring it for $15 million. Management and directors also own 7% of the stock, which is what we like to see. Aldebaran's business model is based on identifying a deposit and then adding value before a liquidity event. To achieve this, it focuses on the portion of the Lassonde curve between discovery and pre-feasibility. This way, it avoids capex and lowers risk for investors. The strategy for Altar is to advance it to a PFS by 2026 before a likely sale to a major mining company. Right out of the gate, we like the company's approach to creating value for shareholders. The Altar project is located in the mining-friendly jurisdiction of San Juan, Argentina. It's ranked number 2 in Latin America according to the Fraser Institute, while Argentina itself ranks 4th overall. We firmly believe that Argentina is on a clear upward trajectory as a mining jurisdiction, which stands in contrast to other South American countries that have faced headwinds as of late. President Malay's economic reforms in the country have started to work, as inflation is now down to 4% as of August from 26% as of the end of 2023. He's also enacted a package of reforms for large investments known as RIGI. Aspects of RIGI that would directly benefit miners is a corporate tax rate reduction from 35% to 25%, accelerated amortization, exempting material imports for a project from tax, a carry forward for tax losses, and the ability to repatriate money freely after 3 years. Additionally, fiscal, customs, and exchange and stability agreements would be in place for investments over $200 million US. Lastly, before we zoom into the project level, the Altar project is located in the Land of Giants, with neighbors including McEwen Copper, Antofagasta, and Glencore, with Barrick, Filo, and the Jose Maria deposit further to the north. The Altar porphyry copper gold deposit has a 2021 mineral resource which totals 15.3 billion pounds of copper equivalent. Since then, the company has drilled an additional 63,000 meters and discovered the Altar United area. We believe that the Altar United area is well mineralized and likely to host a material mineral inventory, as evidenced by the impressive drill results reported from the zone since its discovery in 2022 and 2023. An example of these results is 0.55% copper equivalent over 1,517 meters. We believe Altar could be on course to see a 2x of its total resources in the upcoming resource update expected this quarter. We completed a mineral inventory that suggests that Altar United could potentially host 10.7 billion pounds of copper equivalent at a grade of 0.42% copper equivalent. We also believe that the existing Altar Central and East areas could be on course to see their resources expand by about 25% given the amount of drilling completed. We estimate total resources at Altar could potentially reach about 30.2 billion pounds of copper equivalent. On the metallurgical side, the company has partnered with Newton to assess the technology's impact on samples from Altar. Newton could potentially be used for the hypogene ore, but more importantly, it could help unlock the supergene mineralization that is largely in the form of enargite, which has a high arsenic concentration that would otherwise produce a concentrate with penalty levels of the element. The bottom line here is that while it's not necessary for Altar to utilize Newton technology, it could potentially help enhance the economics of the project. Blue sky potential also abounds at Altar, with numerous other targets that have yet to be tested, the radioporphyry that has not been included in a resource, and the existing 520,000 ounce gold resource on the QDM deposit that could be expanded. The company also has a portfolio of other exploration stage assets in Argentina that provide additional upside. The key upcoming catalysts that we see for the company include an updated resource in the fourth quarter, restart of drilling at Altar in the fourth quarter, the results from the Newton samples and testing in the first half of 2025, and a PEA for Altar in the first half of 2025. We believe the upcoming resource update, where we are expecting to see a 2x increase in contained resources at Altar, should be the key driver for the stock in the near term and potentially lead to a re-rating of Aldebaran's share price. Given that Altar is well beyond the 10 billion pound copper equivalent threshold sought by major mining firms, we also believe it should attract considerable interest from potential buyers, particularly after the resource update.
Thanks for tuning in to the Red Cloud Research Roundup podcast. We hope you enjoyed our deep dive into recent key mining news. Don't forget, new episodes are available every Monday. And as always, you can visit redcloudsecurities.com to access the research reports discussed, to explore all of Red Cloud Securities' free research reports, and to subscribe to our email list. That's it for this episode, and see you next time.